Gautam Shah, Associate Director and Technical Analyst at JM Financial, joins us now. He's our market master for the day. Gautam Shah, thank you very much for joining us this morning. I hope you had a great Diwali and we wish you a great year ahead. Will it be a great year ahead for the Nifty? I mean, first chart it out for the remainder of 2014 itself. Are there some dips to be seen? Will the 8,200 level be conquered? Will we set new highs?
Well, Lata, I think in a bull market, dips come and go, and I think that should really not bog you down. I think it's quite amazing to note that for the last 14 months, our market has not seen a single 10% correction. And I think this is a very important statistic because it actually tells you how clean and how strong this move has been. I think the last time something like this happened was in that period of late 2002, late 2000, or 2000, the whole of 2003. And it's almost after 10 years, you know, such a development has taken place because people keep talking of correction, people keep talking of excesses in the market. But I think what we've seen in the last many months is just time correction and no real price correction. I think the setup continues to be quite healthy. I mean, there are four aspects to this current market setup. I mean, from a technical perspective, sentimental perspective, seasonal and global. From a technical perspective, I think I'm extremely pleased with the way the markets have behaved in the recent past. Because, you know, early October, you had the markets get into a little bit of a correction. We actually saw a 5% fall. But then it just took the market 4 days, you know, to cover up 3 weeks of losses. So that tells you that the bull market is definitely intact and the underlying trend of the market continues to be very, very strong. The markets are also back above the moving averages. Most of the technical indicators are well placed now. You know, there was a little bit of a worry in August when things started to look a little overheated and the weekly charts had turned very, very overbought with some legs of divergence. But all of that has really got nullified after the kind of time correction that we've seen in the late September and early October. From a sentimental perspective, I think we have enough clarity looking at the F&O data that there are no excesses in the system at this point of time. I mean, you don't have a scenario wherein just about everything is moving in the market. Even when the Nifty has been steady, you've had so many sectors like metals, power, PSU, reality, infrastructure. You know, all of these sectors have come off quite a bit, and that has really led to this market balancing it out, you know, from a sentimental standpoint. And you do not have a scenario wherein just about every sector is doing well. So that's, I think, great news. Seasonally, I think we are in a very sweet spot because I think I've said this many times on your channel in the past. The month of October probably has the worst track record for our markets. And once again, magically, I think the month of October has played out perfectly because you had a pretty decent correction in the Indian markets in the first half, and the global markets saw a much deeper correction. And typically, the lows of October tend to hold out for a long time. And we are just a few days away from entering the month of November. And November and December typically are months wherein the sentiment and the trend is quite upbeat. From a global standpoint, I think things have improved quite a bit in the recent past because some of these US market indices and European market indices witnessed an 8 to 9% kind of a correction. But the quick rebound and the sharp rebound that they have seen in the recent past suggests that things are getting better there as well. And therefore, all of these factors put together suggest that the markets remain on a strong wicket. 8,050 is a sort of an important resistance from an extreme short-term perspective. Once that gets taken out, we are looking at the Nifty hitting new lifetime highs. And we feel that eventually the target for this leg of the move is about 86, 8,700. And we hope to see this level, before the new year.
Okay. Gautam, hi, morning. Actually, that was my next question because, a couple of weeks ago, the only reason for which this market could have corrected was global, but then that as well has recovered. In fact, this morning, Goldman Sachs has put out a note where they expect to see the S&P 500 at 2150 by the end of 2015. What's your prognosis on the US markets now?
Well, I think it's a bit of a tricky call because, US markets tend to see a lot more whipsaws than some of the Asian markets or the emerging markets. And I would like to believe that the US markets are not going to, make a higher high in a hurry because I think this correction that we saw in the first half of October in US and Europe, I think tells you that there is some sort of a reversal and this is just a temporary bounce that has taken place. So in that sense, I think India, might not really see a clean move up from current levels, but I'm pretty sure that the Indian Indian markets are going to outperform. Yes, the US market volatility could lead to, some volatility here as well. But I think the US markets will now broadly get into a range, on the downside about 16,000 and on the upside about 17,500 on the Dow. And I think it will just, stay very volatile within this 1,500 point band. Let's not forget, for the last 2 years, the US markets have been making higher highs consistently. But in the last 3 months, those higher highs have not been backed by the technical indicators. And that's the reason I would like to believe that, at least for the time being, the developed world is going to see a little more of consolidation and correction. But I think, if you look at the local news flow, it's really got better and better in the recent past. So if you really have to go by the local factors, I think November and December look like really good months for our markets, whatever, might be the case in the US and Europe.
For the past 4 weeks, we have seen IT give up and Bank Nifty gain. Does this trend have more legs, both the downside for the ITs and the upside for Bank Nifty?
Well, yes, I think this correlation is likely to play out in the next 4 to 8 weeks, because I think the Nifty has been able to, rebound from levels of 77, 7,800 because of the Bank Nifty. And that's good to see, because in the last 2-3 years, every time the Bank Nifty has led the market higher, those highs have always sustained. And I'm very pleased to see the way the Bank Nifty has behaved, and within the Bank Nifty, the private banking stocks. And I think also what I've noticed is that, the CNX IT index seems to have seen a blow off around 11,500, and the way it's behaved in the last 5 to 7 trading sessions, it makes me a little uncomfortable, and it makes me believe that maybe the defensives are going to be out of favor for the time being. For the Bank Nifty itself, I think, we've been a big banking bull, and we continue to recommend our clients to stay long. For people who just want to participate in this bull market without entering and exiting, I think we have an eventual target for the Bank Nifty of about 19,000. So, till we do not see those levels, there is no reason to trade the Bank Nifty. But for short-term and for medium-term traders, I think 17,200, 17,400 is what we are looking at. And, typically stocks and sectors that do well in the bad times, which is the Bank Nifty, which is the capital goods space, they tend to run away in the good times. And I think I really see that happening in the next 4 to 8 weeks.
So let's talk about some specific stocks now then, Gautam. If and when this market takes out new highs, what are the leaders that will take it there?
Well, as I said, I think my top pick would be the Bank Nifty, because we are still looking at it as a very lucrative space from a risk-reward angle. Apart from that, I really like the setup of the capital goods index. The index had seen a 3,000 point fall in the last couple of months. It had developed a sort of a pattern on the charts, and from that very pattern, we've seen a breakout in the last 3 or 4 days. And the strength in stocks like BHEL, Siemens, L&T really explains that. I think this is just the beginning of the next phase of the big move in the capital goods space. It's an index heavyweight space. These are big names, big market cap names, which have the potential to take the index with it. So I would like to believe that the capital goods index could potentially see a 12 to 15% move over the next 3 to 6 months. And I think this is one of the better spaces in the market right now. Apart from these two, I think oil and gas, even though, it's been a sort of a laggard, from a buy and hold perspective, I think the risk reward is very good, because after the rally seen early this year, oil and gas also has got into a bit of a consolidation. Yes, ONGC and Reliance have underperformed, but apart from these two, I think other stocks in the sector, including the OMCs, have done very well. So these three would probably be my best picks. And along with these three, I think I would also go for autos. I think I've always said this on your channel. Good times or bad times, you need to have a pretty large weightage in your portfolio in autos, because they are stocks that are making new highs on a weekly basis, and I really don't see this trend reversing for months to come.
Okay. Actually, we have to take you back to your capital goods argument. You were bullish on that. But in that context, we have a question from one of our money control boarders. He has written from Kotagiri in Hyderabad. Okay, I think his name is Kotagiri, and he's written from Hyderabad. I'm sorry. He asks, what are the prospects of Crompton Greaves in the short term? That stock obviously has taken a 10% knock in the recent weeks.
Well, it's difficult for me to give you a specific stock call because of compliance issues, but I think as a space we like it, and typically these are stocks that rebound from support levels. So I think if one is really long and one is worried because of this 10% knock, I don't think that's a good idea to really exit, because as a sector we really like this space, and therefore I would like to believe that the stock will rebound sometime in the near future.
Okay, that wasn't my question, that was the boarders question, but let me come with something which will definitely plague all Indian investors: crude. What are the technicals of crude suggesting, Gautam? Actually, not just for the rest of 2014, but even for the better part of 2015. Is this a long-term bear run?
No, I don't think this is a long-term bear run. I think it's all about the dollar index and what kind of an impact that is having on gold and some of the other commodities. And given all of this, I think with what oil has done, I'm very clear in my mind that the dollar index is in a multi-month bull trend, and I think eventually we are looking at a target of about 90 to 92 there, which might mean that some of these commodities will continue their downtrend. The crude itself, I think around 75, 78, long-term support really kicks in. So I would be surprised if it were to break this zone immediately. But I would like to believe that between 75 and 90 is where this commodity might just play around in the next 4 to 8 weeks. And I think we will have to really look at it from there. But frankly, I wouldn't look at significant downside from current levels. Having talked about the dollar index, let me also talk about rupee, because I think that's done something very interesting in the recent past. Most currencies in the world have depreciated against the dollar with what the dollar has done in the last 1 month, and that's really been the talking point in the recent past. But the rupee has been stuck in that 60-62 band, and by staying stuck, I think it's actually appreciated. And I would like to believe that eventually the rupee will also appreciate to levels of 59 and 57, and that will be the time when you will see Nifty trading at 86, 8700 levels, possibly by the end of this year.
All right, Gautam, on that out-and-out optimistic note, we'll let you go and we'll see you again later. We hope that this 8,050 level gets taken out so that we can make fresh highs as you suggest.